Hey everybody, welcome to the morning market briefing. It's Tuesday, August 25th, 2026. Hope you're doing well out there. Tons to get to today. We're going to be talking Dick's, we're going to be talking Dunkin, we're going to be talking Meta, we're going to be talking Druckenmiller, we're going to be talking Bessent.
Druckenmiller, Dick's, some are calling it D-Day.
D-Day. Lots to get to. Let's open
Deals?
up though.
Go.
Yeah, let's open up with Meta. Launching a consumer version of OpenClaw AI in the next few weeks. It's going to be called Hatch. At least that's what they're calling it internally. I'm curious what it actually ends up named, given that there's an existing piece of technology out there called Hatch. So going to figure that out.
What is Hatch?
It's like one of those home systems that does like the...
I think that's the name of the sound machines we have for the children. Are those related? Is it the same company?
They're like on an app. It's a competitor, I believe, to Nest.
Okay, yeah.
Yeah. But anyway. Yeah, they have cameras, all kinds. Anyway. This is gonna have trained access to DoorDash, Etsy, Reddit, Yelp, and Outlook. It's gonna not cheap, Ben. $199 a month. What are we getting for that?
Yes, this is like the Claude Premium or ChatGPT, or what a Super Chat GPT is, and basically the latest models will be on this on this OpenClaw AI agent that's going to be known as Hatch. And it's interesting that Meta is the one launching it, because my understanding was OpenClaw is a Claude thing. So anyway, I guess we'll see what happens.
And interesting that they're essentially basically using this agent to just overlay other people's tech. So I guess presumably I would be able to use this and tell it what I want to eat. It would order it. And
yeah, I mean, exactly. I mean, I think it is I guess an Alexa, a smarter Alexa, a smarter Siri.
When Taqueria Tsunami messes up the to-go order, am I getting refunded by Meta or by DoorDash?
I mean,
That's the question.
You could probably say, I'm in the mood for this type of food, and it would just show up.
Yeah.
I think is the... And
sounds
it's
dangerous.
Like you don't know where it's coming from.
You got to make sure your kids don't know how to do that.
It's going to come from one of those Chuck E. Cheese ghost kitchens.
Yeah. Yeah. We'll see what happens. Yeah, interesting though. I guess this would be maybe the first major piece of like day-to-day consumer-facing AI that we've seen, where it's like, hey, the intended purpose is just for everyday people. It's not to build something. It's not to code something. It's not to create efficiency necessarily in a work environment.
It's for you to pay Facebook more money to sell you stuff that they're already trying to sell you through.
That you may not need,
but probably in a more effective manner.
I mean, you could probably tell it to book a flight, book a trip.
Yeah,
and not really know anything, like book a trip to New York.
Surprise me. It sounds like my worst nightmare.
Yeah, where does my wife really want to get dinner from? That's worth $199 a month.
Yeah. This thing might be
no disrespect.
This thing might be too cheap. Dunkin going public. Oura going public. Is Oura hot in the streets?
I mean, it's big this week because of Ackman's daughter had a stroke or a hemorrhage, and her Oura ring caught it, and that's how they know when she had some sort of.
Do you know anybody with one?
My wife.
Yeah. Maybe wore one for a while. I'm not sure if she's still wearing it.
I think she likes it, but then it died after like 9 months, and so we had to get a replacement. Which, I mean, in fairness to them, they gave one for free and sent it off, and I'm just not a ring guy.
Yeah,
that's just me.
Yeah, good. You know how I feel about ring guys.
It's tough.
Jewelry, bracelets.
Yeah, then not a jewelry wearer. Also getting Arby's. Are they part of this IPO with Dunkin?
Yeah. So Inspire Brands, which is a local company owned by Rourke Capital.
Rourke.
They actually both came to my MBA class and kind of chatted for a little bit, but they bought Dunkin probably 5 years ago now, which was their big one at the time. They also own Jimmy John's. They own Buffalo Wild Wings, And so they take this package of fast casual restaurants public is the idea. The problem is Jersey Mike's has not traded it very well since they became public, and Blackstone brought them public, I think, a month or two ago. And so they may delay that IPO. But, I mean, the overall trend for IPOs is here, whether you're big ones like Anthropic, which will probably come out next month, or October, OpenAI, which may get pushed to 27, or even just these other ones. I mean, they're talking about SB Energy, which provides power to data centers. There's another data center company that's probably going to come public. So there's a lot of companies trying to come public in a period where Wall Street tends to wind down at the end of the year. You don't tend not to have big IPOs. Usually that's April, May, June. But I think a lot of people are encouraged by SpaceX, and frankly, they're not getting bought by other private equity companies. Yep. So you need to get some monetization. And right now, public markets is the way to get it.
On Inspire Brands, I'll just go on a little rant here. I like some of these restaurants. I think we've got a complete misalignment between what I would want to see more of and what I actually. I feel like there's a Dunkin' Donuts everywhere.
I mean, that's got to be their most valuable brand by a mile, right?
The thing is, they don't. It's just all like franchises.
Yeah,
yeah,
so
and there's
it's the Dairy Queen of
yeah.
We need more Buffalo Wild Wings.
Yeah.
I'll tell you what, I'm a fan of Sonic. You know, America's Drive-In. Like,
but they
closed half of them.
Yeah, there aren't any anymore. Same with Arby's. I feel like Arby's is not. I mean, maybe they'll pull a Burger King and come back from the dead, but like,
yeah,
they have the meats. This we know, but like, I don't feel like they have any storefronts anywhere near me.
Arby's return on investment from an advertising perspective has to be unbelievably low.
So low.
And I think about like my kids. I mean, there's Arby's commercials on all the time during football. They love, we have the meats. They've never once been like, can we go to Arby's?
Yeah.
Never.
I mean, Arby's pretty jam up, honestly, but I haven't had it. I think the last time I had it was like coming back from Birmingham on a rugby trip.
I feel
8
like
years ago.
I feel like the problem is there's strong meats are very bifurcating in the country right now, and I think that if you're pro meat, you're going to be making your own, and if you're anti meat, then you're certainly not going to go to Arby's.
You're going to go to
Sweet Green.
Deficient in a number of key nutrients.
Yeah, you're not going to last long. And then I would say I think we're at peak Jimmy John's saturation. I don't think we can tolerate more.
You got to be pro bread.
Yeah, Jimmy John's used to be like can you believe they do this in college towns? And now it's like there's one too close to the office, I'd argue.
Yeah. Yeah, it makes it onto the lunch rotation, which is quite disappointing.
And also, Jersey Mike, speaking of bad return on investment, their advertising with Danny DeVito / notorious mushmouth Eli Manning, it's not great. I mean, listen, you got to pay up. Papa John's pays that premium for the Peyton effect.
Get the real Manning.
Yeah.
I mean, for value, I do like Jersey Mike's. It's certainly superior to Jimmy John's.
I mean, pretty soon RC Cola is going to be rolling Cooper Manning out for us. Timu Manning.
Subway's got Arch coming. Dick's Sporting Goods down 12%, down 35% from its peak back in July. Sounds like Sporting Goods just kind of fell apart during the quarter.
Yeah, it's interesting. I think they might even be down more than that now. They said as the quarter progressed, conditions across portions of the athletic footwear and apparel marketplace became increasingly promotional. So they took action to remain competitively priced. Read is prices are coming down. So no inflation in your footwear. They took down guidance. They were expecting about $14 a share. Now they expect $11.50 per share. They now expect to make an operating loss in Foot Locker business, which they acquired, which I still don't understand why they acquired that. I mean, I was thinking it's
not surprising.
Try and play hardball with Nike, but then it doesn't really matter because Nike's
in the tank.
Getting crushed anyway. So
honestly, the best way to monetize that is to start a website and totally pivot as to what the Foot Locker is. And I bet they would make a lot more money.
Turns out it's not a place for shoes.
Yeah, you make a lot more money. That's just a thought. I don't have an MBA.
Yeah. I'm surprised by the narrative here. I've said this on the call before, but I mean, if I am in a store other than Publix, there's a pretty high likelihood that it's Dick's Sporting Goods. We're there all the time. It's always busy. The one on Barrett Parkway, they changed the whole vibe of it like every 6 months.
Yeah,
which
they
is
spent so
wild.
much money remodeling that
Yeah.
thing like 6 times. Because for a while it had that weird sub brand, like the Great
Yeah.
Outdoors, whatever it's called, Great something,
Yeah.
which was pretty sick.
And then it was Golf Galaxy. And
Yeah.
then it was
Well,
Now
I think
it's
originally it was a
House.
Galleons.
Now it's House of Sports.
Yeah, and it's like, I mean, there's great stuff in there, but it's all expensive.
Yeah.
But they're also reselling a lot of other expensive stuff. Like they have like Faraday and Howling Brothers and like all these like Howler Brothers, like the stuff you get as Instagram ads. Now they're selling at a markup at a Dick's Sporting Goods.
I think they've gone too premium, and the stores are massive for not having what you actually need. Like, I mean, every time I go in there, I walk out with nothing because they don't actually have
I wish
it.
I'm the opposite.
I mean, they've got a
I tried to
football
get it.
field where the wall space that's just Yeti stuff.
Yeah.
So like Yeti probably doing great, but the margins. I mean, how much more can you mark up a Yeti cooler?
They crush it on like the sports equipment side.
Yeah.
Like if you go up there on a Saturday and just pretend that as an adult man you're looking for a baseball bat. You're like, oh, I'm going to try this baseball bat. There's 30 kids in front of you in line to use their simulators, and all of them are buying bats. It's crazy. And I'm not. Like, I mean, you just order it online. Yeah.
My understanding that children's bat prices have gone
crazy.
way up.
Yeah. Yeah. I mean, you can, it's quickly become one of those things where I feel like even when Hayden started playing softball, it was like the range of a bat was like $30 to $75. Now it's like $30 to how much do you want to spend? I mean, you can spend hundreds and hundreds and hundreds of dollars on a bat. It's
for a 9-year-old,
and they'll outgrow it in 6 months. So
dollars per swing.
Yeah,
that's where the real inflation is.
That's where it's at. Stan Druckenmiller arguing against Bessent's bond buyback, essentially saying that we need to do something with entitlements and higher deficits. How do you contextualize, Ben, his commentary? Does it change any of your thinking on what Bessent is doing?
Well, the first thing is it's getting quite a lot of flack in social media because it's 100% generated by AI. Now, I think that Druckenmiller definitely played a role in producing it, but I don't think he wrote all of the content.
It's got a lot of dashes in it.
It's got a lot of dashes.
Indicator.
The M dash. Nobody does an M dash in real life.
What's interesting here is that, I mean, having said all this, I wouldn't bet against what Druckenmiller has to say. The more recent, all of his Wall Street Journal op-eds I went through and looked. 2013, he said generational theft needs to be arrested, basically saying entitlements are going to grow and they're going to hamstring our budget over the next 10 to 20 years.
Great wordplay.
He's been right about that. The asset-rich, income-poor economy, June 2014, he was right about that. What's the invisible hand when you need it? This was a little bit different. It was basically saying the Fed should be hiking rates. This was actually, interestingly, the only one that I've been looking at that was also solely written by Druckenmiller. Because then 7 months later in 2018, in a Wall Street Journal op-ed co-authored with Kevin Warsh, he said the Fed should not be tightening interest rate policy. So he's, kind of call it 4 for 5 at that point. Then he said the Fed is playing with fire. This was extremely prescient in May 2021. Said that the Fed needs to stop with its crazy QE policies. And a year later, the Fed finally raised interest rates after inflation really bubbled up. So he was right about that. And now he says to let the bond market speak. So a consistent theme of saying let the market decide. So I don't think it's really asynchronous with what he's talked about in the past, with the exception of December 2018 when he said that the Fed should not be tightening interest rate policy. So I think all of that needs to be evaluated. And I think that in a perfect world, Druckenmiller's argument would be exactly right in that clearly the deficits matter And at 5.5% interest rates, the deficits certainly do matter because we're paying so much on interest, or we're paying more on interest than we're paying on the entire national defense. Having said that, I think the practicality of what he's trying to achieve in terms of fixed entitlements and all of this is it's totally impractical. And right now, the shark closest to the boat is interest rates. And I think Bessent is saying, I got to deal with that.
Yeah, I don't have a mechanism for fixing entitlements.
Yeah, that's going to be Congress, and Congress still isn't being pushed to do that. No one's talking in Congress right now about entitlements. And so I think Druckenmiller is trying to shine a light on that, and I think he's right to do so. But I don't think blaming Bessent as the reason that, like, Bessent's an enabler right now is the right move.
Yeah.
I mean, I think he's functionally, directionally correct. But I think what Bessent and Warsh are trying to do, you know, not to harp on this again, but is create abundance from the supply side, which is going to take time. And in the meantime, they've got to fix the problems they do have. And it's what really annoys me is this is being used as just an absolute field day for, see, we told you Kevin Warsh and Scott Bessent don't know what they're doing. Tim Rose has been going bonkers on Twitter about it. Everyone's like, oh, I told you, Stan Druckenmiller, he's the king of investing.
Kevin Warsh wrote most of Druckenmiller's op-eds with him.
And I would say that those are the ones that are most correct.
Most accurate.
Yep.
Yeah, and even the where's the invisible hand where they're saying you should raise interest rates in May of 2018, that would have been prudent. When they did raise interest rates was December of 2018, when it showed that they actually were now behind the eight ball. That was notably Jay Powell's first obvious mistake from an interest rate policy standpoint. You know, if you go back and listen to any podcast that we did in the summer of 2021 when they wrote the Fed is playing with fire because they hadn't raised interest rates, all we could talk about in the summer, particularly towards July, August of 2021, was you cannot believe how badly they're managing this. They need to raise interest rates. They're so far behind the eight ball, and the Fed was not even thinking about raising interest rates. Then
that's a real quote for those who are joining us 5 years later.
Yeah, and then they let the market run insanely hot. They made inflation run insanely hot. They printed money to the moon, and then they were like, oh, we're going to raise 3 times, which turned into 18 times, which turns into now we have interest rates we can't get down. So that's the issue. And they were right there. I mean, that was the absolute correct call. So this one, I think it's not wrong. The entitlements is a problem. The best way to get entitlements down is to do what they're doing, which is generate more supply, which is going to create abundance, create wealth, get the flywheel of GDP going, and then deport all the people who are receiving these entitlements despite not being citizens, to crack down on the wild NGO theft that we've suddenly uncovered, though they're trying to make the discovery of that illegal now in California with the Nick Shirley Act, which was recently signed, which means that no one can go in and ask anybody why they're stealing money from the government, obviously, and use a camera to do it. But that's, that's the thing. It's so ingrained. That's where the problems are. So if you can attack those both simultaneously with effectiveness, then yes, then that's what needs to be done. And that's what they are doing. But obviously there's an enormous pushback. I mean, particularly in California, which is just insane to me.
I mean, I think I would hope that J.D. Vance and Dr. Oz are paying really close attention to this article, because those are the guys you want to read this article.
It's for them, not Bessent.
Not Bessent. Dr. Oz needs to figure out how to get Medicare prices not to triple what the rate of inflation is for everyone else. And J.D. Vance needs to go after the fraud.
Speaking of Dr. Oz, we need to get O's, the mentalist, close personal friend of the boys, to tell us what inflation is going to be in 27, so we can just go ahead and move the interest rates.
Let's go ahead and get it set.
There's only one person I know for certain that can tell the future, and it's O's, the mentalist.
It's written on your shoulder.
Yeah,
that's true.
Yeah, check it out. Bessent out yesterday at 1 o'clock with Operation Outcast. I will say, I mean, the boys are fans of Bessent. I found this to be particularly vague and toothless in listening to it in real time, but essentially going after the Iranian economy and kind of honing in on digital assets, technology, gold, aviation, shipping, going after parties that are kind of playing in the gray space and saying, hey, neutrality or ignorance is not an excuse. It sounds like we're going to get more information on this essentially daily based on, where assets are seized and sanctions take place. But curious your takeaways from it.
I mean, the one that I'm so interested in is that he said that within a week, a major financial institution will be sanctioned. And he basically, he was asked like, "Oh, well, you're saying this is D-Day, but that was a surprise attack." Well, if D-Day was such a surprise attack, how come they had so many guns on the hills and the cliffs of Omaha Beach? Couldn't have been that much of a surprise. But I've tried to handicap it. I've looked around. And here are my two top candidates for major international bank that's going to get the axe dropped on them. Number one answer is obviously HSBC. They notably have been caught funding terrorism in the past, and they will make money any way they can. And this is the one that I think is actually a dark horse that I have not seen a lot of chatter about, but would be Banco Santander, which is the largest bank in Spain. Because you think Spain closed their airspace to the U.S. Spain has been just letting hundreds of thousands of people run amok all over their cities, notably from, I would say, countries that are amenable to the IRGC, or at least would think that they're doing good work, good, honest work. And the president has been very anti-Trump, very pro-communism, very pro let's import as many people as possible. With questionable backgrounds of military age that hate the West and naturalize them and send them all over Europe. So my guess is going to be Banco Santander is going to be the bank that is facilitating terrorism. If I had to guess,
can we get Kalshi odds on that?
I wish we did, but that's my guess as to who's going to get the axe dropped on them. With 1B being HSBC because they're just known bad actors.
It's going to be interesting. I mean, this is definitely one of those stories where I'm going to be incredibly disappointed if we don't get a major institution that is named. I hope we get one.
I mean, he did say, I don't want to, I failed to finish my point, which is that he's like, why would I want to blow up the global financial institution? So he's going to give them an opportunity to not continue to do this and not have the hammer dropped on them, be cut off from the dollars. These beautiful green dollars we have, but the indication that would be a global financial crisis makes me think that it would be a major European bank. They're talking trillions of dollars worth of assets at these banks with very little liquidity, and suddenly you dry up their dollars and these banks are gone. And so you bankrupt basically the largest Spanish bank. There's going to be some serious negative waves from that. And so I think he wants to avoid that, but he's like, hey, get in line or we're about to absolutely crush you and probably your country. And I think Spain maybe could deserve a spanking. And that Bessent would be the one most into delivering that spanking.
Big spanker. Is there a C-17 in Russia right now, Ben?
Yeah, allegedly. Just kind of following up really quickly on this bank thing.
Spank or bank?
Ben's following up on the spank.
The ICBC, which is one of the top 4 banks in China, if they were to, so China buys 90% of Iranian oil. So China is single-handedly funding Iran. Period. Like that's just how it is. And they their ICBC is one of their banks. It's not the largest bank, but I was just looking at that as a for instance. And they have about $500 billion in U.S. denominated assets. They have about $600 billion in equity, and they have about $9 trillion in assets. So if their $400 and $500 billion in U.S. dollar denominated stuff gets frozen, they would have essentially a margin call to the tune of about $5 or $6 trillion on their bank, which is more than the size of JP Morgan Chase. And if that were to happen, that is 25% of China's GDP. They'd be in worse than the Great Depression. And that would be believable if Bessent were to do that. So like this is the magnitude of what he's potentially threatening. I think that they definitely don't expect that they'll need to do this.
Yeah.
But China's fighting back. Like China's saying, you know what, we're going to stand by what we're doing and we're not going to change. So it's a high stakes bluffing game right now, and I don't know who's going to blink.
I mean, it definitely, part of the deal is putting a lot of pressure on Xi before he shows up here.
Yep.
And my tinfoil hat is, there's the reports that there's been the plane that's landed in Russia, and why was it a C-17? Well, there's been videos that have been going around that there's an American motorcade. It was like 2 minivans and 2 Suburbans with U.S. plates that were being driven through Moscow. I mean, the video doesn't look like AI. It certainly could be, though it looks pretty gritty and taken from somebody's, steering wheel, behind the steering wheel. But my thought is, tinfoil hat, they're going to Russia and being like, hey, we will ease the sanctions on your oil if you sell it to China. That gets China off the hook of buying Iranian oil in the short term. That's going to put maximum pressure on Iran. You guys get a little bit of relief. Iran gets maximum, dried up reserves of cash, and China stays happy, and bingo bongo, we're all in good shape.
It's a bizarre story because, he took off from, they left from Joint Air Force Base Andrews, and then they landed in Riga, Latvia, and then they flew into Moscow, and the Russians are like, oh, we don't know why they landed or why they're here. Like, if you have if we had a Russian military aircraft coming to the United States and we were like, oh, we don't know what's going on.
I don't know.
Like, and that would be unreal. And there's something happening, and I think that your theory is interesting. I think it's certainly more likely than anything on the Russia-Ukraine front.
I mean, we'll sacrifice Zelensky in exchange for not going to war with China over Iran, who, for some reason, there are certain elements, some in this office who think Iran is actually winning this war, which, let's be honest, nah. But I think that's the backdoor way. It'd be like, we're going to be tough on Iran, but we also need those who are not tough on Iran to have a little skin in the game that makes them willing to play ball.
We'll close with this truth post from Donald J. Trump. The United States is giving serious consideration to changing the name of Lake Ontario to Lake America, in that we don't expect doing much business with Ontario any longer. Thank you for your attention to this matter, President Donald J. Trump.
I mean, the thing about the America thing, and one, I'm in, let's do it. On Lake Ontario.
Obviously.
Yeah. Honestly, if you were going to change one, I would change Huron.
Yeah.
That's the worst one. Or you could even do Lake Superior America, which would be pretty sweet too. But, you can't argue against it, I think, because people forget that America includes, like 39 countries. I mean, technically Canada is part of America, as is Brazil. I mean, these are the Americas.
Yeah.
So how can you be mad about that? Yeah.
You're opposed to these continents?
Yeah. Ontario is part of America, and so we're just going to include that in an overarching name that includes everybody. It's very inclusive.
I like it. All right. We'll wrap it up there. We'll be back tomorrow. Talk to you soon.